So I've kind of wanted to like keep that up. Um the reason being is like I think there was like we're talking about parabolic charts and this and that. So by the way, when I did that, I'm not calling for the top like immediately. I've actually, I've talked about it. We're gonna look at this quickly here, how there are a lot of looks like similar correlations to potentially 1929 and 1987 and today. So we're just gonna quickly look at the Dow go today, and then we'll go back to 1929. So I upgraded my stock charts account. I didn't realize it just a few days ago that for $50 a month instead of $25 a month, you can get charts that go back 100 years. Now, granted, most of these charts are just the major averages: Dow Industrials, S&P, Dow Transports. But it's great because then I can actually, because like every time you notice I'm gonna have to find a historical chart, I usually have to, do a Google search or find something like that. So this is great that we can do this. So you can see the Dow after this little correction here, but retested the lows, and now it's back near it's 40,000. I think it's going to break 40,000. So get your Dow 40,000 hat out. But anyhow, if we go back, we're going to go back here, fill the chart. We'll start in 1923, and we're going to go to 1929 to see the crash. So what we can see here is that the Dow, you can see, was steadily going up for years. And then there was this tiny little correction here. And then that happened in the summer of 28. And then there was a little correction here in December too. But basically this was the whole blow off. And this was a huge move. This was like 200 on the Dow to 380. It was 90% in roughly a year. So, and then you can see it took all of that back essentially during the crash, which lasted 55 days. I don't know if I've mentioned this or not for a while, but in my first book, Stock Market Panic, which was published in 1998, I talked about how both the 1929 and 1987 crashes happened 55 days after the top, exactly 55 days. So, which is amazing. And I guess 55 is also a Fibonacci number. So, and that's 55 total days, not trading days. So that's amazing that, nearly, whatever, 50 years or 60 years apart, that was the case. So anyhow, you can see this here. And then if we go look at, now we'll go into 1986 to 1987. We'll see the same thing. So again, nothing's ever going to be exactly the same. But what we can see here is in 1986, there was more of a correction like in September. So instead of the summer, it happened in September, and then the blow off happened. And again, the Dow moved from about 1750 to 2750. So that was 60%. So again, it wasn't quite the same amount, but again, nothing's going to be exactly the same, right? But in each case too, we go look at 87, look at this consolidation that happened here, right? It lasted basically a month and a half, and then the breakout, and then the blow off into the summer. And the breakout started in early June. Well, now we're in late May. Again, nothing is going to be exactly the same. Again, if we go back again to the 1929 chart, again, I'm going to get the, I'm going to get it quicker, 1929. So the 1929 chart, we can see now the Dow moved much more in the first wave of this kind of upturn. The actual consolidation lasted pretty long, although the market did make a new high in June and had this little correction from about 325 to about just under 300 on the Dow, and then blew off. So again, we're kind of in a similar time frame, like mid to late May, moving higher. In each case, in 28 and 29, it kind of broke out in June, and then and you see this last move higher here, and like this move higher was this was actually over 20%. And in 1987, we're gonna look again. That last move higher, 2,200, actually about 20%. So I'm not saying we're gonna have a 20% blow off here. I don't think we've gone up. We'll get it. We'll get another. We'll go back to the Dow here now, the recent Dow. We haven't gone up as much in percentage terms. Again, and nothing is going to be exactly the same, like I say over and over again. I'm just getting a 3-year chart so you can see it. But we've gone up about 25% since the low here of last spring. And then if we go look at the Dow, let's look at the S&P. The S&P is up, just over 20%. And we'll go look at the NASDAQ 100. The NASDAQ 100 is up from closer to 30%. So again, if we were to go up another 10 to 20% in this potential blow off that could come here, you could talk about, that being a similar kind of move again from that. So that, again, a crash is always a super low probability event, but I want people to be aware. And I've done a video on it in the past, but if I quickly just show you something here, we're just going to go back the last 3 years. There's a seasonality where the market often tops in the summer and then bottoms in October, November, and then rallies. And if we even look at like the huge bull market of 2021, you can see there was a pullback here on the QQQ of nearly 380 in August, and it bottomed in early October, right? Here in the bear market of 2022, the market topped in August and then bottomed in October. And here last year, the market topped in July, August, and bottomed in October. So that's happened 3 years in a row. So I think that even if it's just a pullback or correction, we are going to see some sort of top probably this summer, and then a pullback into, and maybe there'll be volatility with the election or whatever. So, and I like I said, I'm just feeling that, like, when you look at this huge move that's occurred and the parabolic nature of some of these stocks right now, that could happen. So, I've talked about NVIDIA, but it looks like to me like all these asset classes are about to break out. NVIDIA, you can see here, had this cut out. Now, is this a consolidation like we saw in NVIDIA over the second half of last year before it really broke out over this year? Or is it just a smaller consolidation? But we can see here, like, NVIDIA looks to me, especially if we get a shorter term chart, and especially because we're in a parabolic move in it, that it's about to break out here. And the next move could be, I don't know, anywhere from 25 to 50% higher. And then when you look at SMCI, you can see the same thing. It kind of consolidated here. It's now broken the short-term downtrend, and SMCI should make a charge back at these recent highs. NVIDIA reports next week, so that could be another thing that really adds fuel to the fire of the rally. Because look, I've seen what's going on with NVIDIA. A lot of people are buying their chips to kind of jump on the bandwagon. We have a little micro cap like in the letter right now, which is about to, I think, start really promoting the stock as well. It's a new deal that was just put together in February, March. That's kind of my way of playing it for the next few months. It's run by somebody I know, and yeah, he's he's a competent guy. So like, I don't know if I agree with him with the longer term outlook for these AI stocks. I think we're in a massive bubble, but I think as at least in the short term, it should be a good way to trade it, and a little more leveraged way, especially if they get this kind of marketing into the stock. But like, that's just for paying members. So so that's what I'm talking. But then we look at every other asset. We're looking at gold. Gold, again, kind of had this little consolidation here. It looks to me, like about 24.25 is high. We're only $30 away from that. Looks like to me that gold is about to break out here. This is silver, and you can see silver has broken out, at least on the close. We're still not really this, we're right at that $30 level, which is, look, at $30 is huge for silver. If silver breaks $30, you can see that's essentially the highs of the post-COVID move. And really, there's not much resistance in silver to the all-time high of 50. We're going to look at this 18-year chart here, and you can see that there's not much really resistance here. Maybe some resistance here, like late 30s on these rallies here that happened in 2012. But silver is looking really good to me. And this is, again, look at this great base, kind of like a cut formation forming, and I think we could really move. So what could happen to silver? Like, look at all assets, if there is some kind of big decline in markets in the fall, would fall. So maybe, silver is volatile. You can see what happened in 2010. Silver in basically, a 3 to 6 month span went from 17.5 to 50. So maybe we just rally back almost to the highs almost this summer in silver. And then maybe that kind of decline in the markets acts as kind of another resistance at those highs. And then silver is really ready to break out. Because remember, if there is a big decline in the markets, that's when I really expect the Fed to cut and the whatnot. So we look at BTC as well. Bitcoin, like it just looks like to me all asset classes are about to break out here, because look at there's going to be other tailwinds. And the other tailwinds include, I think, the June inflation numbers, obviously inflation for April, so June, or the May numbers in June are going to tick down even more. So BTC kind of looks the same way, kind of consolidating, was up a lot yesterday, et cetera, et cetera. And then, if it breaks this, maybe you'll see a blow off to 90,000, that sort of range. So again, it looks to me like, I hate to get overly bullish, but I never really was too fearful on this market correction. Again, it reminded me of those corrections in the spring in both 29 and 87. So that's kind of what we're looking at here. So I think this is a pretty good stock chart of the day, kind of overview. It does look like to me a lot of things are starting to break out here. And like really, if there is some kind of decline in the market and then the Fed can finally cut, what I would expect is the gold stocks will get whacked for a little bit, like a short-term time frame, and then they'll be the first thing to come back. That kind of happened after 2008. They're not going to go down like they did in 2008, just so you know. But that kind of happened in the corrections in 2001, 2002. So that's what I expect, is that like what would happen is, let's say for argument's sake, I don't know, the GDX goes to 45, in a kind of blow off move in the summer. It could probably go back to where it is now and then probably be breaking out by the end of the year. And see, that's when money will really flow into precious metals, because what will happen in a big decline like that, the risk on assets like AI, like BTC are really going to get whacked. And gold and precious metals will be the first ones breaking out. That's why in 2020, they attracted so much capital. Because if you go look what happened in 2020, when COVID happened and everything sold off, you could see here, gold, look at within basically a month, the GDX was pre-highs. The market wasn't pre-highs for a number of months. Bitcoin was not highs or whatever, like the 2018 high for, again, a number of months. So the gold stocks kind of led out of the gate when the liquidity started to flow, and that's when they usually perform the strongest. So you can see here, just from a short term, we're right at that resistance of about 35, 36 on the GDX. And then we have this at 40. So like I was saying, it could go to 45. It might even go a little higher, because if it breaks the kind of highs of 2022 and 2020, probably this looks like it could go to 50 or something. So that can, again, make sense. It's always hard to predict the future exactly, but maybe the GDX breaks out to 50 in some kind of big move that happens, from now to the end of the summer. And then that move and downwards in the fall could take it maybe back to the low 40s, back where now the old resistance becomes support. Anyhow, that's stock chart of the day for today. I hope everybody is doing good. We're going to be back doing this on a daily basis. Like I said, because look, I have to combine marketing or whatever with, I guess I could say, content, because and also when I put out good content, I want people to see it. And if you put it, when you're doing this on a daily basis, people tend not to look at the old charts. So when I do something like the parabolic curve video, which I thought was an excellent video and very historical, I want to do these other things as well. So anyhow, I wanted to wait to these other things because I want people to see that video. So like I said, when I'm talking about parabolic curves, NVIDIA or AI or whatever, I wasn't predicting the top, because I thought there could be one more blow off or another move. And who knows, maybe we just see another correction and another move higher. It's hard to know, because when these parabolic curves get going, a lot of these things can go higher than you think. So, but I definitely think I really wasn't shorting. I had a small position in NVS, which I'm now out of, and then I'm going to wait to maybe re-enter in the summer. But like I said too, just to finish off here, if we go look at the last few years, even in the big bull market moves, that August to October period has been weak for equity. So my opinion myself, I'm going to take a lot, keep your powder dry, as they say. I'm going to take a lot of money off the table this summer, over the next, between now and probably the end of July. The top, whatever, the blow off top could happen in August, but you're never going to catch the exact top. Jesse Livermore used to say the two things that are impossible to predict are the first eighth of a bull market and the last eighth. So trying to predict the last eighth is a loser's game. And then maybe I'll probably take some strategic short positions at that point and just see what happens. And what are you really going to miss? It's especially if the markets are starting a huge move now. You think you're going to miss a huge move in, from August to October? No, like maybe at most the markets will rally a few percent, and you can always get back in. And we did that last year, by the way. I got more bullish at the end of October. So that's it right there. And again, if you even just look at this gold seasonality, the last few years, here's 2020, you can see, or even 2019, you can kind of see a high in the summer, then a consolidation here. Then you can see here. Now this did have a big rally, but even here into the summer, look at this, move here. Now continue to move lower to next year, but you could have just sold and at least got in at a better entry point. And then same thing in 2021. The high was more in the spring, summer. The low was in October. Same thing here in 2022. And of course, 2022 and 2023, same kind of thing. So I do think the gold stocks are going to act more like they did in 2020 right now and move into the summer. But again, with the market and gold stocks, it looks to me like definitely probably one of the typical seasonal fall corrections. And with this parabolic nature right now of what's going on, could be even worse. I know a lot of people are saying, oh, this is just starting. And I've seen people saying this is the middle of the start of a 6-year bull market. I don't see that with the froth that I'm seeing right now. The mem stocks woke up again. We saw those huge moves in GME and some of the other ones. So I just don't see it. I think that mem stock rally was, again, kind of maybe a sign that we're in the later parts of this rally as well. So, okay, I thought I'd just leave it at that. And everybody, I hope you enjoyed this video.